This is your LMAX exchange technical update for Monday, October 31st, 2016. Euro dollar. So the euro has seen a correction in recent trade after trading down to 7-month lows in the 108.52 area, and there's room from here for additional corrective upside back towards the 111 area, which serves as previous support now turned resistance. Although we shouldn't expect to see much of an extension beyond 111, with the rally still classified as corrective and ultimately the downtrend firmly intact in favor of that next lower top and fresh downside extension below 108.52 and possibly into the 105 area further down. Sterling dollar. So cable is seeing a bearish consolidation off the recent 31-year low in the 120 area. At this point, the market is still firmly trading to the downside, with only a pushback above a previous base at 128 to really take the immediate pressure off the downside. Until then, there is risk for another drop down towards 120 and below, and potentially into the 115 area. Dollar yen. So dollar yen has seen a push higher in recent trade back above critical psychological barriers at 105, and although we saw a bit of a pullback on Friday, the break above 105 is something to watch, which could be signaling a longer term base that's in place right now. Next key resistance comes in play at 107.49. That's the high going all the way back to July. At this point, any setback should be very well supported above 103, with only a break back below recent support, which comes in around the 103.15 area to compromise the more newly adopted constructive outlook. Euro Swiss. So Euro Swiss is trading off that base that we've seen. The market has been confined to a consolidation range between 108 roughly and 110 above, and this latest pullback down towards 108 was once again supported, and the market is in the process of bouncing. We would need to see a break below 108 or sustained break below 108 or above 110 for this range to be broken, and until then, expect for the range base to be very well supported and rallies towards the range ceiling to be well capped. Aussie dollar. So Aussie is looking like it wants to once again stall out above 77. The market continues to rally up to 77 and above, but every time it does, it stalls out and trades lower. At this point, key support though does come in at 74.21. That's the low going back to the 27th of July. And we need to see a break back below this level to accelerate declines and put pressure back on the downside. Dollar CAD. So dollar CAD is trading higher in recent trade after the market took out some key resistance several days back in the 132 area. This puts the focus on a fresh upside extension up towards the 135 area further up and beyond. At this point, any setback should be very well supported, ultimately above 130. Kiwi dollar. So Kiwi looks to be in the process of carving a top off that 2016 high at 74.86. The market has seen a bit of a bounce in recent trade, but ultimately any rally should be well capped now ahead of the next major downside extension below 70.35, that recent support, and towards next key support at 69.52. SPX 500. The S&P 500 is slowly showing signs of carving out a major top, and the market looks to be in the process of doing so if it takes out that 2108 September base. A break below that level will accelerate declines back towards the June base at 1990. At this point, any rally should be well capped ahead of 2180. Gold. So gold is looking like it wants to finally base out after seeing some severe setbacks in the month of October. At this point, though, the market is spaced out just ahead of 1240, and it looks like it could be putting in a higher low ahead of the next major upside extension and bullish resumption back towards those 2016 highs at 1375. That's all for now.